So I think these gentlemen actually hardly need an introduction, and their companies hardly as well. So rather than spending time on that, I thought we would sort of jump right into the discussion. I think we only have about 30 minutes, so why don't we get going? Yeah. Great. So thank you all for being here, and I think this is the first time everybody's been here in person since pre-2020. So it's great to see everybody. And I do have my phone here. I'm not checking my phone. This is where my questions are, so just to let you know. So obviously, the last several years have been, very interesting times in the world, and we're obviously very fortunate. The data center sector continues to be very robust. Lots of customer demand still. Lots of continued activity in the sector, capital markets-wise, M&A-wise, and valuations for the right assets continue to be very robust, but obviously challenging as well over the last little while. So it'd be great if each of you could take a few minutes and talk about what has been your greatest challenge, but also your greatest opportunity over the last few years. And maybe, Bruno, we can start with you.
Yeah, thank you, Madonna, and thanks, everybody. It's great to be here. I think COVID's been a big challenge. I think we all know that for a fact. But I think the industry has been going through an exuberance about a lot of infrastructure players, new guys coming into the business. And I think it's getting harder to do our job. It used to be hard. I think it's getting harder. Power, land is harder to secure. Customers' expectations are much more extreme, and they want everything cheaper on time, etc., and faster. But they sign contracts and then they expect it to be delivered almost immediately. I think those are some of the challenges, but I think there's one big challenge that we all know about: sustainability. We are seen as the sinners of the sustainable world. I think we have done a lot to debunk that, but I think we are not recognized for that, and we're doing more as a team. And I think the last one I wanted to call out was the challenge that we are facing real time is the dearth of talent in the sector. I think we have to challenge ourselves to do better there as a group. Attract people from adjacent industries, build people, younger people, a bit of gray hair here, and some gray hair on this panel. And this is the newest, but he still has gray hair already. So I think we all need...
Just in the last 3 weeks.
So I think we need to do more there to see what we can attract into the industry to expand the pool of talent that is needed in the sector. So I'll stop there for a minute.
Andy? Same question to you.
I think you covered the waterfront, so it's not too much to add on to that. I mean, if you look at digital realty, my 7.5 years at the company, we've been called part of the consolidation and building a platform. Now, stringing together 6 continents, 50+ metropolitan areas, 4,000 customers. We're not done yet, and I've been using the analogy, we're putting the hubcaps on the car while we're driving 100 miles per hour down the road, trying not to miss these waves of demand coming. I mean, 2022 certainly hit this industry in the face on so many fronts, whether it's post-pandemic supply chain shortages, inflation like we haven't seen in 40 years, having to educate our customers about what inflation means to them. It's been a whole learning curve. The things that we took for granted when we permitted and purchased land around power have no longer become normal course when the largest market in the world is now have bottlenecks for several years. I think that some of these challenges, you can be glass half full on it though, because established players like all of us on this panel and others in this conference, we've been in this business for a long time. We built the platform. Our value proposition, I think, to these customers is only strengthened. Many of our biggest customers were doing it more and more themselves. I think that pendulum is probably moving back in our favor, given the fact that we have the boots on the ground, we have the land runway and growth. And I do think the one we haven't been talking enough about is that talent piece that you hit on, and it's in all levels of our organizations. I'm going to be doing this for a long while, God willing. Some of these other folks on this panel hopefully are going to sail from the sunset before me. So at the leadership levels, at the operational levels, expanding from our legacy skill sets and bringing more talent into the industry, I think it's going to be vital to its long-term success.
Fair. And maybe you can focus more on the opportunities too.
Yeah, actually, I think both Bruno and Andy hit on some of the challenges, right? The supply chain is a challenge. Power is a challenge in many different ways. Sometimes it's a regulatory problem. Sometimes it's been an execution problem from the power companies themselves. They were surprised by it. Many underestimated the scale and demand that was coming. It was only 4 or 5 years ago that 5, 10 megawatts. Wow, now it's like, let's talk about, can you support 100 or 200 or 500 or a gigawatt? And that's created a lot of challenges, but that is the opportunity. And Andy touched on it. With the challenges with power, with the challenges with zoning, with regulatory challenges, with the talent challenges, and the execution complexities, those that can execute, those that have a proven track record, those that are willing to take on hard markets, hard locations, hard geographies. I think the global hyperscalers in particular, both US and non-US, as well as the web scalers, as well as the SaaS providers, and we need to make sure to talk about all of them. They're asking for more. I'm with you. And so it creates a real opportunity, and I think that's why the industry continues to do well. I can't say inflation snuck up on us. There's a maturation that has to happen in the industry around it. For many of them, it's the first time that some of the people on the other side of the table have ever had to deal with and understand the implications of that. Interest rates, who knows where they stop? I don't think it snuck up on us. Many of us were doing financings in 20 and 21, getting the capital in place to deal with that. That will run out, and there'll be a new awakening as we parse through that capital. But I think that's creating opportunity. We're fortunate. A lot of problems to solve, but that creates the opportunity, and it's the same whether we're doing it, whether companies are self-performing, and I think for the most part we're aligned. Bruno hit the last issue, which was sustainability. As an industry, it is great to see us aligned. If there's one thing we're all together in it, it's that. We need to be together in creating talent pools, and frankly, digital infrastructure is a great career, right? I wish there was in every university, but sustainability, it's been awesome to watch the industry rally, think, act, share, and do it as one. We don't do enough external promoting of it, but internally, I think we're all on the same side of the table.
Great.
Good.
Thank you, Madonna, for hosting this panel, and good to be back in Hawaii after many years. From an opportunity perspective, last couple of years through the pandemic, what we learned and saw is the whole adoption of cloud and the scale of the cloud growth is now irreversible. And particularly in markets like Asia, we are seeing the early trends of the scale that US has enjoyed over the last many years, especially in the last decade. And from Asia perspective, which is where we are headquartered and serve the Asian market, to build a scale in our business is a hard problem, I think, as Bruno, as others have touched on. And building scale across multiple countries is even a harder problem. I think what the opportunities lie is customers are looking for operators who have an execution track record, who are able to solve, tricky problems in these markets. If we can do that and have a better solution and sustainability, I think the opportunities are tremendous. I think in the last couple of years, we have seen a lot more entrants come in the market. But if you have an established base, if you have a good footprint, I think customers are willing to partner with folks who have the track record of execution, because the scale at which they're expanding requires the level of capital commitment, the level of execution commitment, and track record. I think those combinations, if you have some of these attributes, I think an exciting place to be. In the next 2-3 years, you have to withstand through the cost of capital increase on the increased interest rates, survive the supply chain challenges, build a talent pool in the industry. I think over the next 2-3 years, I think the strong ones will get stronger. I think it's going to be exciting.
Thank you. No, and touching on, I guess, building on that, obviously over the last few years, we've seen a lot of consolidation. There's been a lot of regional players that are smaller that, have gotten rolled up, especially in North America and Europe, a little less so in Europe, in Asia maybe. And now, the players that are, there's certainly, still startups that are, that have capital, but maybe not a track record. And then there's you guys, obviously great track records, growing very, very quickly. Where do you see like the competition and the consolidation going, and which of you guys are going to merge?
That's right.
Madonna's got an agenda.
That's right.
I'll be collecting engagement letters.
And sign the engagement.
Exactly. Randy, you want to start?
Wow.
Sorry.
Start the merger or what?
No,
Feel
no.
free. Do I want to start the rumors?
Yeah.
Look, there's no doubt there are companies that are platforms, and there are companies that are great in a market or a couple few markets. I think the nature of the beast, if you look at the 20, 30 largest purchasers of data center capacity, they're looking on a global scale. They're expecting consistency on a global scale. They expect automation and execution, not only on the build, but on the operate, right? I mean, they've it's critical to them as well. So I think what you're going to see, and we haven't seen the end of it, I think you're going to see companies that are in, great in a market or great in a couple few markets are going to get absorbed by some of the platforms. Let's be real. The market in the state it is, organic is probably better, right? I think folks are going to start to get a bit more selective on the quality assets they're rolling in, because I can assure you the customers care a heck of a lot about the quality of the assets in which they're parking it. As for platform consolidations, where the big engagement letter gets signed.
Yeah.
Look, will there be some? I suspect so. I think you saw a little bit of that start to happen, maybe with folks tucking in some South America stuff with the OData transaction. But I think you're going to see a half a dozen folks end up at a global scale, frankly, to just help fulfill the needs of that top 25, 30 acquirers of capacity, because they're certainly deploying on a global scale.
Yeah. Andy, you guys have done probably more consolidation than anybody else. How do you see it go forward?
I mean, this sector has had tremendous consolidation over the last just several years. I mean, the critical puzzle pieces around the map have kind of united, and I agree with Randy that these global platform offerings, we at Digital, full product spectrum from the enterprise colocation to the hyperscalers. We're dealing with some of the biggest customers or companies in the world, doing it at larger scale, all the places around the world they need to be in, is a tremendous part of our value proposition. I think that's where the industry is going. It'll be interesting to see. I mean, we're in such an uncertain, volatile world right now. It's like catching a falling knife when you think about where valuation settles out and where some of the key drivers of valuation, whether it's cost of capital, access to capital. So I'd be surprised if you see in the, call it 2023, anything like we saw the last several years of companies coming together. But there's going to be down the road here, this rotation of capital is coming to the space and backing teams and building platforms and expanding. It's not permanent capital, or most of it's not permanent capital, and they're all going to be thinking about matchmaking and exits and keep you very busy for a long time, Madonna, which is a good thing. But this is certainly where the trend is going. And the other thing, having lived through it, you're doing great work on the M&A and the capital raising advisory, but when you close the deal, that's when the real hard work happens. Yeah. And the piecing these companies together, because we're all a little bit different, we have different systems, and we came up from different heritages, and I've got the scars on my back in terms of trying to stitch these companies together, because these customers want the global consistency across the board, and That's easier said than done, and when you don't stamp one of these out one by one yourself.
That's very fair. Bruno, how about you? You have obviously, very focused on Asia, but a great platform in Europe with Virtus, and you now with the Macquarie partnership, you're looking to expand there. And you have a lot of partnerships. Does that help you, do you think, or hurt you, or?
No, I think
How do you see that going forward?
this is one of the mantras we believe in very strongly about partnerships. We believe that a lot of the work we've done in now almost 10 geographies, hard yards in the hard markets, India partnership with Tata, Indonesia partnership with a leading local partner with Triputra, in Philippines with Globe, in Thailand with FPT, Virtus now with Macquarie. We believe that we need to think global, act local. We need to have the people on the ground to do the work that's happening. And I think we are very happy with the outcome. I think it is harder. It is harder because you need to build the vision together, the shared mindset, and create that. But I think what's driving that is our customers. Our customers look for scale. Customers want to see the uniformity of deployment in these difficult markets because it's difficult to execute. Securing land in Indonesia and in India and in China, etc., it's not easy. And I think the team here will testify to that, and a lot of the people in the room have knives on their backs and scars on their backs to make that happen. But I think the DNA of STT is really to develop partnerships in a way that is supporting the vision and the mission. And I think we're quite pleased that we've been able to do that in the last 9 years and becoming that key position in every geography. Think global, act local, and with local partnerships to deal with a lot of the nuances that are typical in these countries, which are uniquely Indonesia versus Philippines versus Thailand versus Korea versus Japan. They all have different issues to deal with. So, and that's been very helpful.
Yeah. No, and I think, actually, I want to come back to the partnership thing in a minute, because I think most of you use that to some extent or other. But Rangu, you're very Asia-Pac focused, and obviously it's expected to be the fastest growing region in the world. So, very good that you're focusing there. So what do you see for yourself? Like, how are you going to continue to grow Princeton Digital there?
Sure.
Yeah.
From our perspective, took a little different tack than what Bruno does. From old friend, he gave me some gray hair when we sold the business to him. But I agree with Bruno in terms of the challenges in Asia are quite diverse. I mean, if you look at even up Japan, which is a developed market, to build a data center there is very different than building in Western Virginia or in Denver, Colorado. I mean, the challenges within a large country like US are relatively consistent. And if we can solve one problem, we can solve across the region. While in Asia, it's quite challenging. So what we did, Madonna, we have taken a model of being a single enterprise model. So we do not do minority investments. All is completely controlled by PDG. And we build capabilities in a way that we've been able to design, have design consistency across all the markets, and also hire a local team. So it's a single enterprise model, and that has helped us to be able to provide some consistency solution to our customers. But it does provide a challenge in terms of entering new markets. It may sometimes take time because build local capabilities. So that's one thing we have done. Second, from a growth perspective, Asia with 4 of the world's largest economies, China, Japan, India, and Indonesia on the heels of being a large economy. I think we are very well positioned being in these 4 markets, and being headquartered in Singapore positions us quite well to deepen in these markets. In China, we have a large footprint, continue to expand in India and Japan, which are 2 very important markets. And third, what we have done is been raise capital enough, well ahead of the challenges that we've seen turbulent market in the last 12 months, and having a very strong balance sheet positions as well going to the next couple of years. Having cash in the bank, having a strong balance sheet, having depth in the market already, I think we see the next 2 years as an opportunity to lead the market, maybe even lead some consolidation and continue to expand in this market. So that's kind of being private. we don't have to worry about what, like Andy has to worry about every day. Being private gives us an opportunity in this turbulent market to, and having a good balance sheet entering this market. And we talked about new entrants earlier, Madonna. A lot of announcements for Asia in the last 12, 18 months.
Yes.
And that is going to be interesting for us, companies like Bruno's and ours, to stay above that noise. I think that's very important because to build data centers is going to be hard. Making an announcement or having capital or having some land doesn't give you overnight capacity to build the market. Customers know that. But the noise factor, I think, is important, and we have to make sure we stay above that and focus on our execution.
Absolutely.
A lot of noise.
There is a lot of noise.
A lot of noise.
Yeah.
Typically, if you have to talk about what you're going to do, you're probably not doing it. So I would say the success is inversely proportional to the projection, to the announcement.
Yeah.
So I know these customers. Last thing in the world they want you to do is talk about what you're doing.
Yeah.
So it's a pretty darn good indication. If you're talking about it, you're not doing it.
That's a very good point.
But to Rangu's point and Bruno's point, Asia is going to be overweighted on growth. There's no doubt about it. It's long overdue, and we're all excited about it. And we take a similar enterprise approach, but we use partners. So
yeah.
I'm sort of the blend between these guys. We are driving the designs. We are driving the operational platform. We're driving right down to the methods and procedures. We're immersing our partners in our core operations, design, build. So we've got a global rotation program that you get immersed. It's kind of like EdgeConneX University, for lack of a better description. And you're actually many months working in the environment in order to get there. But let's not kid ourselves. You talk about Japan. Heck, the difference even between Tokyo and Osaka can be pretty dramatic. We needed at our size and scale, we needed the right partners, but our customers demanded that we're on the hook for the answer. We're on the hook for the answer. We're on the hook for the SLA. We're on the hook for the quality, et cetera. So we found a blend with that. But I do think, from a growth perspective, we're going to see overweighting in Asia in the future. Execution challenges will be greater because each country will bring its unique ones. Partnerships will be unique, and I'm with you. I think, rise above the noise, right? Rise above the noise. Don't believe everything you read. Those that are doing are doing. Those that are talking are talking. Be a doer, not a talker.
That's a good one. Andy, what about you? You guys have used partnerships for a long time, and it's something in the real estate world especially, right? Very common. And do you expect that, so for strategic reasons and for financial reasons, how do you guys look at it?
Most of the time, we try to pick partners that are bringing more to the table than just financial resources. So whether it was in Japan, where we partnered with Mitsubishi Corporation for MC Digital Realty, or when we went to Latin America and basically brought in an infrastructure fund who had cut its teeth 100 years ago in Brazil. So that playbook is something, it's a fine blend, global consistency, bringing your expertise to the table and your history, but also there's a local element to these businesses, right? I always make it as simple as this. When a customer flies into Paris, France, or Singapore, they want to know which coffee shop to go to and how things get done in that part of the world. And they don't want to be on the same plane coming from the United States with their salesperson or their resource. So that blend of global consistency, global platform with true local expertise, I think is, and partnership is a way to get there.
Makes sense. And maybe Andy, almost 3 weeks into the new job, right?
I know. I think I passed the month now.
Really?
I've misquoted myself. I'm a seasoned veteran.
You are definitely a seasoned veteran. So can we expect any major shifts in the strategy of Digital Realty? What will be different under your leadership?
So, listen,
what do you want to accomplish?
We got a tremendous foundation I'm inheriting and building upon here. This company was at the dawn of this industry. And I've had the good fortune to be part of putting the puzzle pieces together the last several years. and I'm about accelerating that momentum on multiple fronts. We came from the ground up. We came from the days of calling it wholesale to scale to hyperscale, and we broadened our capabilities. And we still want to be at the table as that trusted partner in 40, 50 locations with those hyperscalers, and we'll come up with some more magnanimous big name to call them eventually when they get to 1,000 megawatts or things like that. But we also have a great value proposition when it comes to the enterprise in their hybrid IT and where they're going with artificial intelligence and incremental use cases. And we sit at 1 or 2 global platforms with that offering. So that full spectrum, we think, is a place we can offer tremendous value, and we want to accelerate what we were doing there, and that's going to be a big piece of where I want to take the company. 2, as I mentioned before, integration it's behind the scenes, it's in the company, but we're trying to eat our own cooking and bring technology to bear, and we're going to a cloud-only ERP system, and that's going to roll through all of our operational systems and tying these platforms together and moving to the get-it-done phase when it comes to integration. And last but not least, I'm part of a company that's a public company. Yes, a shareholder or another company could put an offer for $500 and we'll sell the company, I'm sure, or a board will have to take a hard consideration, but we're here for the long run. We're here for on a permanent basis, and we need to be able to plan for the future. And as this industry gets more global, gets tremendously more scale, gets more complicated, we need to be preparing for that, whether it's diversifying our sources of capital, whether it's planning for a longer term future. So I really want to put that at the forefront where we take this next.
Okay, great. And Bruno.
Yes.
No, all of the I guess the benefits of this industry is, such fast growth, but it obviously requires a lot of capital as well. And as Andy said, even as one of the largest public companies in the world, you have to diversify your sources of capital. Like how are you guys thinking about it? Maybe Bruno, we can start with you. And there was an article recently talking about you potentially going public, and that's obviously a potential source of capital, although Andy may disagree.
Right now, don't do it.
Don't do it, yeah. Exactly.
Thanks.
Yeah.
In 1 month of the job, you're telling me.
Yeah, exactly.
No, I think the news on Bloomberg is probably a pretty slow day on the Bloomberg news. Overzealous journalists decided that they have some information which I think, and numbers which we even, goodness knows how they found, worked out some numbers like that. And from our perspective, I think there's, we've had an exceptionally good shareholder to support us to this growth. In the last 9 years, from 0 to, more than 1 gigawatt of IT load, et cetera, and all those geographies, et cetera. So that's been useful, that extremely helpful to get us to where we are today. And I think going forward, there's always going to be this struggle between private-public opportunity for capital. For this capital-intensive business that we are in, we're going to need more capital. I think we all agree that. We've continually looked at all sources of options. I think we just closed an excellent investment by Macquarie into our UK platform, Virtus, and we are set for more growth in Europe together with them and in UK. And we see that these investments are options for us to consider. We look at bond offerings, we look at everything that is a possibility, including, of course, IPO. And it will not rule anything out. But I think we are in a well-placed position to have strategic and financial optionality for our strategy. I think, and to have the shareholders of all our businesses to see that, we are committed to see the growth, they understand the growth, they see the growth, they like what they see, they want more of it, and we believe there's much more, in this business that we can deliver for our customers. So I think a bit like what Randy said as well, you focus on the stuff ahead of you, and we've been always about, less talk, more delivery. Talk later, even if at all, because I think we'll be proving what we do with, to everybody else, our customers, our shareholders, and our stakeholders, our employees, etc., when we continue to be successful in all the stuff that we do every day, operating the facilities, getting it up on time, serving the SLAs, etc. That's the important stuff. The money will flow.
Randy?
No,
Yeah.
From a,
Go ahead. Go, no, Rangu, go.
No, sorry. No,
I want to hear how you're funding
this is the
it.
private side, that's the public side.
I love being private.
What do you think?
I love EQT.
So we can say anything we want, nobody's going to, no IR is going to get upset or anything. So jokes aside, I think a little bit along what Bruno has been saying, I think similarly, we have our options are wide open. If you look at long term, we were fortunate to have 3 very deep-pocketed investors, as you know, Warburg Pincus, Ontario Teachers Pension Plan, and Mubadala, who are long-term investors. And we have also structured ourselves where we have a single enterprise. So we manage our balance sheet at the group level. So equity is being able to manage and efficiently at the group level. And also having multiple countries, we're able to finance locally where cost of capital is kind of still manageable in some of the markets. So we just closed a financing for a Nanjing project just a couple of days ago. In China, the local financing is still very attractive, I think. And we're able to balance our local asset level financing and group level. And if we can optimize that well, I think we've been able to do that. And still have enough cash at the group level to be able to invest and take risk where we want to and would like to. And having these deep-pocketed investors who are long-term and have a pretty relatively deep pocket and believe in the secularity of the market. So there's no rush for us to try to go public. Whether the markets are volatile or not, we don't need to rush. I think we have enough to do in Asia. If you look at, we're at 600 megawatts, 20 data centers, 5 countries. So enough scale that over the next 2-3 years, we continue, if we can double, that continue to give us enough cash flow to kind of reinvest and be able to grow further. So I think we are not rushing from that perspective, but also gives room for optimizing further. So if there are vehicles that we can do in terms of, once stabilized assets come, we have enough in our portfolio of stabilized assets, we'll be able to, optimize our cost a little bit more effectively. So it gives us a lot more optionality over the next 2-3 years. So we're not kind of rushing to look at public markets. At the right time, it'll drive us.
Yeah.
So.
Randy?
Yeah, look, I think it's me too, or same thing. Fortunate to have relatively new investment for EQT. The 20 billion fund of the du jour every other year. Exactly. That's kind of nice to have. Yeah. Same thing. There are interesting ways to deal with the debt markets at the local level, at the corporate level, and a blend thereof. We've over-indexed our partnerships on renewable power producers. We don't need the money, but it turns out when you have them as your partners, it turns out that also brings another class and cost of capital. So most of the partnerships we were talking about earlier, we over-index on the largest renewable power producer or one of the largest renewable power producers in the market. And that in and of itself opens up another level of access to capital. So I'm happy I'm private right now. I feel for Andy. He's going to be aging 2 days to 1 as the rest of us. But
like
it's also that time, right? Markets ebb and flow, and we're in no hurry to go public either. When it's time, it'll be time. Yeah. We don't think today is the time for someone like us.
Yeah. Fair enough. But we'll see next year. We'll have this conversation again.
Well, we're up on the stage next year.
Yeah.
Maybe we're talking differently.
Okay.
Yeah.
Well, thank you, gentlemen, for participating, and thank you, everybody, for coming. I think we need to wrap up now. Okay.
Thank you.
Thank you all.